Hello my fellow traders, you're welcome once again to another, would I say episode? Yes, episode. So today I'll be showing you another strategy like I promised. Well, this one will be on the 1 hour chart, like my normal thing. I deal with pullbacks, expansion, then pullback. So on this we are on a pullback. This is the pullback phase. This is the pullback phase. The thing is, like I always tell you, pretend as if this has not happened yet. Nothing has happened here yet. Just pretend as if this is the pullback. And let me show you one magic. I would make use of one particular tool, Fibonacci tool. Most of us are very used to this tool, the Fibonacci tool, and have a specific setting that I've placed it on. So the thing is, let me bring it out so you see it. This is my tool. Just look at it. Let me put it where you can see it. I have the settings on 0, 27.0, 73.0, then 100. That is what we're going to use. So this is the pullback. But before that, I have to quickly tell you one thing. There's a way I calculate or I pick my pullbacks. My pullback has to break the highest low or the lowest high. So for this now, let me show you what I mean by the highest low. This is the highest. All these lows. This is a low. This is a low. Let me just quickly show you what I mean. Because the people who are familiar, for those of us who are very familiar with highs and lows, well, let's just do it because for the sake of the newbies. This is a low. Like yes, this is another low. This is a low. This is another low. Then we have okay, let's do this. This is another low. This is a low. This is a low. This is a low. That is what I mean by my low. So this is the highest low for this move. This is the highest low. So now my pullback, what I do most times is my pullback has to break the highest low. Okay, let's look at it. Let's come back. Please just pardon me. Let's just focus for a bit. Look at this. Let me just come up with something. I want to show you guys, because most of the strategies I teach, I want you to get it. I don't want us to waste our time on I didn't get it, it didn't work or something. I want you to get it. This is a low. Look at it. This is a low. If you look at it now from here, stretch this to this place, all this is a low. Okay, let me just do it so you see it. Unlike too much stories, look at it. This is the only place you broke it. This is a low for this move. The entirety of this move, this is the low here. Let me split it here so you see. This is the low for this, all this move. This is the low. And now for this particular low here, this is the low here. Imagine for all this till to this candle, this is the low. Once it gets broken, it is free. So for, just pardon me, for this black candle, let me point. Just look at it. For this one, for this candle, this is the low. For this particular black candle, this is the low. So you'll be surprised, like from here to here now, the low hasn't been broken. It got broken here. Look at it. A break of that low and then a lower low form. That is how I pick my own pullback. And if I'll tell you one funny thing, that is the way to go about it. That is the way to pick your pullbacks. I don't know how you've been doing it, but one thing, let me just tell you this, let me chip in this. That is the way to pick the pullback. That is the external pullbacks. All other pullbacks, maybe you're somewhere here looking at it like they said 3 candles, 4 candles, all these are internal. internal pullbacks. This is the actual external pullback. If you have a break of something like this, that is when you have a break of a trend. If you break something like this, you've broken the internal pullbacks. Please try and get that. I'm going to do a video on how to properly mark out the external and the internal pullbacks. I'm still coming with that, but for now let's just concentrate on this strategy. So like I said earlier, my pullback has to break the highest low or the lowest high. So for this example, the highest low, which is this candle, was broken. There's a lower low below it, so it's a pullback. So now I'll place my, this is the Fibonacci tool, don't forget. These are my settings: 0, 27.0, 73.0, 100.0. So I'll pull my Fibonacci from the top to the bottom of the pullback. What I do is, once every move the pullback makes, I'll be expanding my pullback, expanding the Fibonacci tool, until what I'm looking for is, I need this 27% spot has to be broken up to the upside, because I'm looking for a buy. Now if that 27 spot is broken and a higher high is formed, once a higher high is formed, there's going to be a pullback to the, if it is a buy position, you know, the buy candle is going to be the candle that will break the high, that will break the 27 spot. It's not a high that's being broken, but the 27% spot has to be broken. So once it is broken, you're going to look for the opposing candle, that is the sell candle before the break of that's the sell candle before the break towards the upside. There has to be a higher high. That break has to bring in a higher high. Once you have a higher high, the price action will now pull back to that candle. That candle is your entry for a buy to the upside. Now it depends on you. You can choose your own entry model, your entry style. You may seek your confirmations before you enter on that candle. What I'm saying is this. Let me put a mark there. Look at it. There was a breakout. Price action now pulled back to here. Did its magic, but look at what happened. It went up straight. Now I know you'll be saying, okay, I said something like there has to be a higher high. Let me remove the fibs. Like I said there has to, let me put it back because of the explanation I'm trying to make. Here's the fibs. We need that fibs back. Okay, let's put the fibs back. Mind you, I refer to Fibonacci as the fibs. That's my own pet name for it. I love Fibonacci so much, so I have a pet name for it. So the fibs, the 27% line, I said a candle opposite the breakout candle is, that's the highest, that is the last candle before that breakout candle. The buy candle broke that high, broke the 27% line. So the sell candle, the last sell candle before that break, is the candle you are picking. Some people call it order block. I would like to call it order block too. What do I care? It is the order block, or it is the betraying candle, the Judas candle. That's my secret code for it. So it got broken. So now there's this thing in forex. There's this 3 candle policy. You either have a higher high break above the 27% or a consecutive 3 candle break. That is, a candle has to break like this. Now the candle that broke it, that is the red candle, the buy candle broke it. Another candle, the same color candle, breaks that candle. Another one breaks that candle. The 3 candle policy in forex is, the first candle, the same color candle, the first candle has to be broken by its same color candle. That is, the body of the other candle is going to swallow this the wick of the first one, and the third one is going to swallow the wick of the third one. So indirectly, you either have a 3 consecutive candle like this, a set of 3 consecutive candles like this, or you have a higher high form above the 27.0%. So once you have a 3 consecutive candle form like this, it has in the forex context, it has covered for that higher high. So there's going to be a pullback towards the candle that was sweet spot candle, then you have a buy. Just look at it. So if you want to put a mark there, let's just place a mark there. Let's do it like this. So once we've marked our candle, we can remove the fib, so it makes it easier to see. So look at it from here. You broke it, came here, it went up. Your entry models, your confirmation, everything would be within this block. Is that not a lovely strategy? That is a blessing from Fibonacci tool. Okay, let's go to another one so you see. So here's another one. Like I said earlier, you either have a break of the lowest high to confirm that pullback by one strategy, or you have a 3 candle break. This is 1 candle, 2 candle, and 3 candle. Remember I said the candle has to break below or above the wick of that candle. Let me expand this so you see. I'm going to do a video to explain this candle. There's something they call clean candles in forex. I've explained to you. I'm going to do a separate video for that one. I'm going to join the videos together. That is a clean candle. What is meant? I'll show you what a clean candle is. Then I'll show you how I specifically choose my pullback. I think that should be the next video I'll do, to make you understand the logic or the rationale behind my choosing certain things. Okay, let me just pick this so you see. Look at the wick for this candle. It swallowed this. The body of the last black candle here didn't close below this wick. That means this second to the last candle is as good as this third one. It is the last candle for this. But look at the wick of the third candle before the second to the last. The second to the last candle closed below it. We'll get to that one day. So let's just look at it like 1 candle, 2 candle, 3 candle. So now if you pull the line here, so what do you have? You have a close and a giant candle. In forex, most times a giant candle represents like 2 candles. So please put that one in your memory. We'll get to these things. We're coming. Lazy Academy, we're coming. Just in the comment section, anything you don't know, just ask. Lazy, I don't understand these things. What do you think, or why did you take certain actions out? I always make sure I respond to it. I'll answer your questions. So I explained that just to make you understand why I chose this as a high, as a pullback. Sorry. So now it qualifies for my pullback because of the 3 consecutive candles and the breakout candle, break above candle, and the giant candle. Okay, so let's remove this. So let's now pull in our fibs. I love fibs so much, my Fibonacci darling. I love it so much. Fib has been a blessing to me. So let's pull it to the top from the bottom from the start of that pullback to the beginning, to the end of that pullback. Let's now expand. The rule for this strategy is once you pull it from, you follow it. I said it earlier, you follow it. Once the pullback starts, you put it at the highest spot. If there's a break below the 27 spot, if there's a break below and a lower low, you wait for it to pull back. But until you have that, So now if you place it, this is the highest point of the pullback. Look at what happened. There was a break below the 27 spot, a break below a lower low. There was a lower low below it, and what the price did, price pulled back to it. And the thing is, if price is going to pull back, price will always pull back to the candle that is the opposing candle. If the candle that breaks the 27% line is a black candle, that's a sell candle, it will pull back to the last buy candle before that break. If it is a buy candle that breaks the high, okay, let me say this. If you are trying to look for a buy, a sell, if you are looking for a sell, you pull your fibs from the lowest, from the start of the pullback. This is the start of this pullback to the end of that pullback, and look at what happened. So if you're trying to look for if this is a sell model, if you're looking for a buy model, you pull from the top to the bottom. So now from the bottom to the top, when you pull it and expand it, there was a break of the 27% Fibonacci spot. There was a break and a lower low formed. You have to wait for a lower low to form. Once there's a lower low below that 27 spot, price will always break below, create a lower low, and come back to that opposing candle before that break. So what we do is, don't forget, let's always, this has played out already. I'm just trying to show you what happened with my different strategies that made it sell. Now if you are about to take a new trade, all you have to wait for is just wait for a pullback. So let's just look at it like maybe price just got to this spot. This is where price is. Maybe price pulled back to this spot. It now break the 27% low, created a lower low. So let's just say price was at this spot here, somewhere here. Price has not pulled back. So where this line is, that is where the price action has gotten to. Let's pretend we've not seen all this. We've not seen all this. I'm telling you, with time we'll start using maybe trading view. We can actually take some live trades. There won't be all this after effect thing we're doing. We'll get there. Just bear with me for some time. So let's just pretend as if after this trend line we've not seen all this has not played out. What played out was just a pullback to this spot and a break below, a lower low was created, and price was trying to come back up. So considering the fact that we know that once there's a break below 27%, price will always come back, we will just map out our candle, that very lovely candle will extend here. So now imagine price, you marked the place and price was here when you marked it, and price eventually came back. Look at it, it came back into that spot here and sold off. Let's remove this so you can see. Look at it, that candle, that's exactly where price came to and sold off. So let me just mark it so you see. I like marking it like this. Look at it, remove this. So price came to that spot. Look at it, just that same spot. I went down. This is the second example. I remember one thing, it is forex we're trading. Trading generally, not only forex, trading stocks, currency pairs, cryptos. There's no strategy that is 100%. So at times it will happen like this. At times there won't be a pullback to this spot, just do its thing and just go. But once you have this kind of strategy, you have it in place. You're trading different currencies. If you have a very significant strategy like this, a very good one like this, just mark it out and wait for it. Some people wait for it like here, and when they get there, when the price pulls back to this place, they have their own strategies. Maybe they wait for a particular low to be broken, then a pullback and things like that. We'll get to that. I'll show you things like that. Already I can see that pattern here. There was a break of the highest low here. I think the highest low was somewhere here. There was a lower low created, a pullback to the origin, and we'll get there. But look at this strategy, a very lovely one. I told you earlier, I'll always bring strategies like this. Let's go for the third example. I want to do like 2 or 3 examples so you know it is not child's play. This strategy is a very good one. The only tool you need is just a Fibonacci tool and my settings. Let's wait for the third example. So here we are on GBP USD, another example. Look at it, there was an expansion, a pullback. So like I said, my pullback has certain conditions I used before I set it as a pullback. So the condition, that is my pullback has to break the lowest high. So if I look at it, this was not a high, but here this is a high, and if I pull my trend line here, you will see that there was a higher high, so it qualifies as a pullback. So my tool, my Fibs baby tool, I love that tool. Fibonacci tool is an old tool, but people don't get it. It has hidden magic numbers. That is why some people are out there making serious money. You'll be wondering, is forex really that cool? People are making money from it. So like I said, like look at it. If you, let's say this is, you start pulling from here, you pull it to, if it's going up, you pull it, you are looking for the break below the 27%. But let me tell you one thing, always make sure your entries are above the 50% Fibonacci level, Fibonacci retracement level. That is what I'm saying is, once you start having a pullback, you first pull your Fibonacci tool on the extension, pull from here to here, mark the 50% spot. What I'm saying is, I've changed the setting of my Fibonacci tool. This is the extension. Expansion, extension, still the same thing. So, like most people would say, most times, I don't trade below the 50% spot. Sorry, let me just put it back. So I think my 50% is somewhere around there. Yeah, my 50% Fibonacci spot is somewhere what they call the sweet spot and the early spot. So the equilibrium at the middle, see, this is the 50% spot. So most of my, you said there was an entry on 50%, but that was, so this is 50%. So for the normal Fibonacci setting. So what I'm saying is, please, when you're trying to use this strategy I'm teaching you, make sure your entries are above the 50% level. Maybe it falls on maybe the 618 or the 79%, but try and avoid the 50%. Avoid it like a plague. So if you measure it from the start of the pullback, we're always dealing with the pullback, then look at it, even when it was on 50%, when price retraced to the 50% mark, there was no entry because there was no break below 27.0 position stage. But when you now pull it to here and extend it, let's remove the 50 so it doesn't get us confused. So when you now pull it here, look at what happened there. Let's just do it like this. I don't want you to get confused. Look at what happened. When you pull it here, that is from the start of the pullback to this spot. Look at what happened. There was a lower low. There was a break below and a lower low. And I said what? According to this strategy, the candle, the opposing candle before that candle that breaks it, the candle that breaks this 27% spot was is the black candle. So the red candle is the sweet spot candle. So you mark that red candle. But before you mark that red candle, remember one thing. This has played out already. So let's pretend as if all this has not happened. There was just a break below, just a lower low break. All this has not happened. All this has not happened. All this has not happened. So you simply put your mark on that candle before the candle that breaks the low, and you extend it. So imagine, let's say price was here. At this point, this place, let's imagine, let's pretend price has just gotten here. So after you create this, look at what price did. Price came there. But you know forex, they will always haunt your stops or your stop loss. So this move was just to haunt people's stop loss. They know this is the sweet spot. They know it. But they know if this is the sweet spot, what would you do? Your stop loss will definitely be around this place. That is what they came for, to get you out of the trade before they now go towards the direction. The thing is, they know you are right. From what your analysis is, you are right. But they want to take your money, push you out before they start going. So what they do is they push you out, then they come back to a lower low, then they come back to that sweet spot. Because this calculation is right, look at it, they tagged in again to confirm this is the spot. So now if you have a good stop loss, maybe you are not taken out, you'll be in the sell. But assuming you were taken out and you had a lower low and you entered again, you'll be in for this move. Look at it. Look at what happened from that spot. Look at it. Please tell me the strategy is not love it. Let's remove the fibs to the fibs baby too. I love that too. Let's put a mark there. Look at it. That is the candle. That is the sweet spot candle. Look at it. This was just a move to steal your money, to kick you out of the trade. They know this. They look at you like, look at this lazy trader, lazy forex, lazy academy guy. He's been taught. He knows this thing. Let's kick him out. They now kicked you out. But you, as a sharp guy, maybe your stop is above him, or maybe you got kicked out but you entered again because you know the right thing, you know where the spot is. You entered back. Look at what you would have gotten. Okay, so now let's look at the stop loss. My stop, like I always say, will be maybe a pip or two above this place, this high. Correct this. So my stop will be maybe a pip or two. So definitely I would have been taken out too. But since I know I'm very, very correct, I'm sure of this thing. Once there's a lower low here, at the retest of, should I call it a retest? I won't say the pullback, a retest of this, I would have entered back because I'm very sure of that spot. I would enter back and look at what happened. Look at where price came to. Price came in. This is the third example to show you the strategy is crazy. I'll always come crazy, juicy strategies like this. Okay. The only tool you need, Fibonacci tool. Adjust the settings. 27.0, 73.0, 100, 0. That is all you need for that strategy. As I've shown you for examples now, this strategy is crazy as well. So please subscribe to my channel, click the notification bell so you get notified once I come up with juicy stuffs like this.